Welcome to this lesson. This is the lesson in which we will be learning one strategy which is actually profitable, which is my personal strategy, which strategy is used by 95% of traders, the strategy which is used by all the smart money concepts, in which all the big players, this strategy is used by them. This strategy, I think for me personally, it is always profitable, and this strategy always works. So, this strategy is called supply and demand zones, trading on supply and demand zones. I know some people will be thinking that this is only the basic strategy, but according to me, I always prefer to stick on the basics. And I think supply and demand zones are always profitable if we are using them with proper knowledge. Plus, this basic strategy also helps you to identify three things. First of all, the smart money concept. Secondly, the liquidity. And third, it will help you to understand how the big players are thinking. So let's jump on the screen and understand how this supply and demand strategy work, what are the zones, how to mark them, and how to trade on them. So this is the chart of gold. Now we have to understand how basically supply and demand strategy works. So first of all, what is supply and what is demand? Demand is the zone where there are always buyers. Demand is the zone when buyers think to trade, when buyers want to trade, in which we are having the buyers pressure. For an example, here we can see that there are a lot of buyers. Here we can see that there are a lot of buyers. Here we can see that yes, there is a lot of buyers. The momentum and the pressure of buyers is very high. So the zone where always the buyers are there and where the pressure of buy is there, it is known as your demand zone. And now what is the supply zone? Supply zone is always a zone where there is a lot of sellers. For an example, if we can see, yes, there are a lot of sellers sitting here on this zone, because every time whenever the market is coming on this zone, the market is going down. That means there are a lot of sellers. For an example, if we take this, yes, we can see that there are a lot of sellers on this zone, because whenever the market is coming to this point, the market is going down. That means there are a lot of sellers. So the simple thing, whenever at the point when buyers are there, that zone is known as demand zone. Supply zone is the zone where every seller is there. Whenever there is selling pressure from that zone, that is known as your supply zone. Now, our second question, how to mark supply and demand zone? See, personally, I like to be very clear, very simple, and I want to always teach the basics, because I think if we are going in the market on a simple basis, if we are not complicating the things, then at least we can think to be a profitable trader. Because I see so many traders, they are going on to so many complex things. But according to me, straight away, whenever I am opening a chart, I am always thinking just two or three things. First of all, how to mark your supply and demand zone. It is, I think, very simple. For me, I always think two things whenever I want to trade supply and demand zone. First of all, I will always make sure that if there is a big momentum candle, I will mark my supply or demand zone before that candle from high to low. I will tell you the meaning shortly. Same with the demand zone, same with the supply zone. Now, what this actually means. So this is the goal chart on a 1 day basis, because it will be very clear for you to understand on a daily basis, right? So if I want to mark my supply and demand zone, now first of all, we will understand how to mark our demand zone. Now we can see that there was a huge pressure of buy on this zone. What I have told you, whenever there is a big momentum candle or there are three consecutive candles all together, we have to take the previous candle. Which means if there is a big momentum candle like this, that means we can take our demand zone from this candle, we can acknowledge this candle. Or if there are three momentum candles, that means if there are three momentum candles like this and like this, we can also take it as our demand zone, we can consider it. So here we can actually see that there was a huge pressure of buying, and there was three continuous candles of our buying pressure, so we can consider it as our demand zone. So how to mark now our demand zone? Like I told, if we see here, there was a big pressure here, and we have to take the candle before that, which actually caused that movement, which means which actually caused that momentum in the market. So we have to take the high and low of the previous candle and mark our zone. So this will basically be our supply zone, and you can our demand zone, sorry. And you can see whenever the market is hitting in this zone, whenever the market is coming in this zone, it is always bouncing back. That means there are a lot of buyers at this point and at this point. So that means we have actually put our demand zone correctly. Now we'll just take an example of more demand zone, how to mark them, so it is clear. If we take it like this, and first of all, I just want to clarify that this strategy will work on all the charts, on all the markets, whether it is crypto, forex, shares, futures, whatever it is. It is the basic strategy. It will work in all the things. So if we want to take the supply zone example like this, here you can see that there was a lot of buying pressure, there was a lot of buying candles altogether. So that means it can be our demand zone. So we have to see, we have to acknowledge only two things at present: if there is a high pressure, if there is a big momentum candle, or if there are three small candles or a medium candles consequently. That means that is our condition to mark our demand zone. Here we can see that yes, there was a three momentum candle. So that means, as we have learned, we have to consider the previous candle which actually made that movement happen. So here we can see that this candle actually made the movement. So we just have to mark from high to low, and this will be our demand zone. Sorry, demand zone, yes. And here also we can see that there was three big momentum candles. So we just have to take the high and low of the previous candle which actually made the movement of that big demand zone. So that candle from high to low will be our demand zone. So I think now you are clear how to mark up the demand zones. Now we have to see how to mark our supply zones, and we have learned that supply zones are the zones from where the market is coming down, in which there are a lot of sellers. So you can see that there was a big momentum here, there was a three big momentum candles, and we can see that basically this candle has made this big movement happen, which was this one, which was this big selling candle. So basically if we are watching it, we can see that basically this candle has made that big selling pressure, big momentum. So we will be marking our supply zone from here, and you can see whenever the market is coming on these zones, the market is going down. Whenever it's coming here, the market is going down. And if we want to see some more examples, we can actually see some more examples. As you can see here, there was a big selling pressure momentum candle, big fatty candle, which means it's a right opportunity to mark our supply zones. So we just have to take the previous candle which actually made happen to this supply zone, and we are marking this supply zone. And we can see, yes, this is a valid supply zone, because whenever the candle is coming, whenever the market is coming on these points, the market is always going down. That means there are a lot of sellers in this zone. So this was the two things, supply and demand zone. In the next class, in the next video, I will teach how to take the supply and demand zones correctly, how to trade on them, how to identify that whenever the market is getting reversed, whether that supply or demand zones are valid or not. All these things we will be learning in upcoming classes. For the timing, we have learned how to mark our supply and demand zones. Just have to remember three things. First, whenever there is a big momentum candle, whenever there is a big fatty candle, we have to consider the candle before that, its high and its low, because that candle was the reason that this big momentum fatty candle has created in the market. So we have to mark that previous candle high and low. That will be our demand or supply zone. In second condition, we can see that if there are 3 or 4 momentum candles, and the momentum candle means if there is one candle like this, small candle, and again there is one more candle like this, and again there is one more candle like this, maybe in buy or in sell, it doesn't matter. So this is the momentum candles. That means the previous candle, which actually, suppose if we take this previous candle, because of this previous candle all these 3 momentum candles formed in the market. So we have to consider its high and its low point and mark our demand or supply zone. So this was the strategy of supply and demand zone. In the next class, I will be uploading it next week, and we will be learning 2 things in that class. First of all, how to identify correctly supply and demand zone, how to identify whether our supply and demand zone is correct, and we will learn some of the supply and demand zone patterns, which is very important, which I also personally use. So I will see you in my next class.